It's mid-cap radar time this Thursday afternoon. You're with us on CNBC-TV18. I'm Hormas Patakia. With me as always is Vivek Iyer. And Vivek, we left the studios half an hour ago. It was still at 23,320. It's still at 23,320. And we are awaiting some very important results today. 3 Nifty companies reporting results today. But the broader markets are doing well for themselves today.
Absolutely right. Broader end of the market's doing very well. The mid-cap, small-cap indices both up over 1%. The Nifty bank is the one that's also aiding the rally. That too is doing quite well. But we have quite a lot lined up on the show. Let's start off with the top headlines. Advances far outstrip declines as heavyweights inch up and mid-caps rally. Strong gains in US overnight on easing inflation and the move. Realty, PSU banks gain while FMCG and consumer durables drag.
L&T Technology Services rallies after an inline third quarter which sees its highest ever quarterly deal bookings. Management maintains its medium-term aspiration of $2 billion in revenue and margins of 17 to 18%. On the other hand, Oracle Financial slips in trade after the company's revenue declines on a year-on-year basis.
Paytm jumps more than 4% after brokerage firm MK upgrades its stock to a buy rating and raises its target to 1,050 rupees a share from 750 rupees earlier, citing reasonable valuations.
CEAT has come under pressure following a weak third quarter. The margins have declined almost 380 basis points due to higher raw material costs. The EBITDA also fell close to 20% from a year ago.
Aeroflex Industries hits upper circuit in trade today after the company's net profit and revenue surged year-on-year in Q3 FY25. Management tells CNBC-TV18 that FY26 growth will be much better than growth seen in FY25. Company also announces expansion plans.
Well, the benchmark indices are where they are, but the broader markets are doing fairly well for themselves. The mid-cap index is up over 1%, and as is the small-cap index. And with this move, both the mid-cap and the small-cap index have recovered almost everything that they lost on Monday. As they ended off the highs of the day in yesterday's trading session, but ended in the green. And today, the small-cap index is up over 1.5%. The mid-cap index too up over 1%, closing in on the day's highest point as well. Of course, as we mentioned, we are awaiting 3 very important earnings from the index heavyweights, be it Reliance Industries, Infosys, and of course Axis Bank, most of them coming after market closing. Reliance has surged to the highest point of the day. Infosys conversely has slipped to the low of the day, and Axis Bank is holding on to gains of 1%. But there are plenty of other movers in the broader markets, and which are those? Vamakshi is joining us to tell us just that. Vamakshi, good afternoon.
Well, good afternoon, Hormas. It's a good day for trade for the mid-cap stocks. Let me first pull up the list of top gainers. We have GMDC. That stock is up nearly 12% in trade today. Jupiter Wagons is another one that is surging over 13% in trade. Ircon and RVNL. RVNL has a news flow. That stock is surging nearly 8.5%. Apart from that, all of these sugar counters are seeing a surge today. All of them are up in trade because sources are suggesting that the ethanol price hike is on the cards. Keep in mind that this is something that the industry was asking for, and resultantly we're seeing stellar gains, especially on Sri Renuka as well as Bajaj Hindustan Sugar. Apart from that, PSU stocks are rallying in trade. Keep in mind that Punjab and Sindh Bank reported its numbers yesterday. That stock is seeing a surge of almost 7.5%. Indian Bank, Union Bank and Bank of India, all of these counters are up somewhere around 3 to 4%. Apart from that, there are several stocks reacting to their numbers as well. We mentioned Aeroflex Industries just a short while ago. That stock was locked in upper circuit. It moved away from that and then again is back in the upper circuit. Mahindra EPC has been locked in the upper circuit since morning. Translate Lighting, that stock is up nearly 3%, and L&T Tech Services, that stock is reacting to a good set of numbers. And lastly, on the flip side, let's also look at some of the stocks that have lost momentum in trade today, are under pressure. Newgen Software is down nearly 5%. CEAT as well as Kalyan Jewellers. Kalyan Jewellers has been in pressure over the last couple of days, continues to be under pressure as of now as well.
Thank you so much, Vamakshi, for joining us and giving us a sense of what exactly is transpiring in the broader end of the markets. Well, let's now dive into the Growth Code, an initiative by Grow and CNBC TV18, which offers valuable insights and strategies to help you make well-informed trading decisions. This week, CNBC TV18's Nigel D'Souza interviewed Praful Kulkarni, founder Alpha Leo Capital, to understand why traders must learn to avoid the noise in the market.
Any practical tips for the traders? How can they stick to their strategy and avoid overreacting to news?
News, I think it's a very important question because Most of the people overestimate their ability to judge the exact outcome of the markets to the news. Two things here. One, we need to understand that we don't have the capability to exactly judge what would be the possible outcome or how would exactly market react to the news. And the second thing is we need to understand that we are at the bottommost layer of the information chain. By the time you get the news, understand that the game is already over, you are late to the party. And at the same time, since you don't have the capability to take such big bets and sit through the ups and downs, and you don't have the capability to exactly judge how the market's going to react, I would say retail traders are better off not looking at the news, and they would just have to stick to their strategy by completely eliminating the noise.
Welcome back to Mid Cap Radar. Well, DB Corp just posted its Q3 set of results, a slightly muted set with net profit and margin both declining on a year-on-year basis. To discuss this and the outlook going forward, we are joined by Girish Agarwal, Promoter Director at DB Corp. Good afternoon, Mr. Agarwal. Thank you so much for joining us. First up, give us a sense of how exactly ad revenues panned out. We understand we are coming off a much higher base last year on the back of election spending. But how has Q4 shaped up in terms of ad revenue, and how was Q3 too?
So if I would see the 9 months, I'm happy to bring to your notice that we have done the highest ever top line and bottom line in the 9 months since the inception of the company. Last year, as you know, 3 states were under election in our markets, MP, Rajasthan and Chhattisgarh. So because of that, this quarter, we have a 1% growth only. But if you look at 9-month base, I think from 9 months this year and 9 months last year without the election, I'm at a double-digit growth on that way. So I think that way, business looks comfortable. I think my larger concern is going forward, because if you see this quarter, the India GDP is 6.4. I'm slightly worried on that, because if this quarter continues like that, then I'm sure all the industries would show a slightly muted results, and that will impact on the advertising directly.
Mr. Agarwal, good afternoon. Thank you for joining in. But since you mentioned about the GDP growth, now how is the current quarter shaping up? It's still early days, right? But what are you expecting in the fourth quarter? Do you expect this current growth rate to sustain? And what is an overall growth estimate that you have for FY25?
So, the advertising front, the automobile, real estate, education, FMCG are doing decent. They are doing pretty decent, I would say. But government advertising is fluctuating. And I hope they continue this way. That's one. Second thing, one best thing happening for the industry is the newsprint prices have come down. Like if I compare my last year and this year, 9 months or even 3 months, I'm down on the newsprint price on a 3-month basis around 5%, on 9-month basis around almost 10%. So I think that is providing a major respite to all of us.
Understood that. Mr. Agarwal, so margin improvement aided by lower newsprint prices is something that we understand. So Q4, can we see sequential improvement, and FY26, can that improvement sustain? Any guidance that you could quantify for us?
I think on the Q4, as I say, we're already in January, and I'm not yet seeing major response or rebound coming from various categories. So now let's hope what the budget has to say in the next 10 days' time. Based on that, I think your 26 also will get clarified.
Mr. Agarwal, it may not necessarily be a business question, but in the early days, every time somebody would wake up, the first thing that they'd pick up in their hand is the newspaper. Now, the first time they wake up, they see their phones to check the news. The newsprint business for you continues to remain soft as well, right? Even though you mentioned that newsprint prices have come down, the digital business continues to grow. How much is digital now a part of your business? And do you see this as the new normal going forward as well?
First of all, I would like to correct you. People do get up and check not the news, check up the WhatsApp, that what their friends has to talk about. Okay, family, everything is all right or not. For news, I'm happy to say almost all my readers, those who are reading us every day, are very much intact. There's the reason why time spent of our newspaper and most of the newspaper stays there. Having said that, are people reading news on digital also? Yes. So in the morning, they're reading newspaper, and during the day, they are reading a digital. So I think this combination will continue. But at the same time, I guess all the newspaper organizations need to ensure that they offer more quality, more in-depth research to the readers, so that the habit of spending that 35-40 minutes in newspaper continues.
So what's the newsprint to digital mix right now, Mr. Agarwal, for you?
95% of my revenue comes from newspaper and the radio. Digital is hardly anything.
Mr. Agarwal, one question which we want to ask you is FY25, in terms of circulation, will you see growth? Would you be able to quantify the growth? And going forward, what is it that you're targeting? And what are the key triggers to go ahead and drive circulation growth?
This year, the growth has not come, but you rightly mentioned that now the time has come since the newsprint prices have gone down. So we as an organization are running a huge readers scheme. Like we are running a current readership scheme for motivating our readers, the fringe readers, the casual readers to come back, read more. The prize is worth almost 14 crores is being offered to the readers. Every participant gets a prize. Idea is to create excitement in the category. See, one thing what is happening, if you see as a consumer, every possible category offers me some excitement apart from the product or services what they give me. So we realize that maybe in our category also we need to do that. So I guess all the newspapers, because of the newsprint prices down, we have the ability to offer that saving back to our readers. I'm sure we are going to do that.
One final question from my end, Mr. Agarwal, is on margins. They improved from the previous quarter, but year on year, they're still slightly lower. With newsprint prices coming down, do you see them trending back to normal levels? What's the outlook there?
At a 28-30% margin, what are you talking about here? We're already sitting at 28-30% margin. 1% here and there doesn't make much of a difference.
Okay, thank you so much, sir, for joining us, giving us a sense of how business is shaping up, and we wish you all the best for 2025. Well, now as we slip into a short break, here's some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen. Welcome back to Midcap Radar. Well, a quick stock check on Yatharth Hospitals is what we are looking at. This particular stock at one point of time during the session was down close to 7 to 8%. You've seen a bit of a sharp recovery there. But one of the reasons for the kind of volatility that you're seeing in the stock price today has been an Ambit note. Ambit, in fact, has written a note where they have dropped coverage on Yatharth Hospitals, and their last rating that the company had, or Ambit had, was buy. What is it that concerns Ambit, and why have they dropped coverage? They are saying that IT raids that were initially conducted in October 2023, there have been sufficient lack of disclosures. Along with that, they say that the recent move by authorities to attach various properties and equity shares in subsidiaries raises concerns. On the back of that, they've gone ahead and dropped coverage on Yatharth Hospitals. It's a lot of volumes on the stock today, and also very, very volatile. But it's seen quite a bit of a sharp recovery from the intraday lows. But we'll now shift focus to the sugar sector. Sources to CNBC Awa suggest that Cabinet may soon approve an increase in ethanol price. To discuss this and more, Prashant Biani, Vice President of Institutional Equity Research and Sector Lead for Agri-Input, Sugar and Hotels at Elara Securities, joins us now. Good afternoon, Prashant. Thank you so much for joining us. Well, you've seen the story that was done by our colleague from CNBC Awaaz. What are your first thoughts, and how does this impact the sector?
Good afternoon. So the move, I will say, is mildly negative in my view. If the government increases only the B-heavy ethanol price, we were expecting some increase in cane juice-based ethanol price as well. Because in the last 2 years, we have seen that FRP for sugarcane has increased, but the last revision in juice ethanol price was only 2 years back. So the cost of production for the ethanol manufacturers have shot up, but not the realization. So it is mildly negative in my view if there is no price hike in the juice ethanol segment. So this is what we were expecting in B-heavy ethanol, a price increase of 3 to 5%. So B-heavy ethanol price increase is fine, but we were expecting something on juice ethanol as well.
So if this does not take place for the cane juice bit, and it only takes place for the B heavy and the C heavy, Prashant, What is the kind of impact that you are expecting on the margins of a lot of these companies?
So C-heavy ethanol price is same as what it was earlier. Earlier it was in the form of additional incentive. Now it has been in the main ethanol declared price as well. So there's no change in C-heavy ethanol profitability. But I think there will be some downward revision in overall distillery EBIT if we have only B-heavy ethanol price and nothing on cane juice. Because cane juice volumes are also are likely to be decently higher this year, because this year we are seeing full-scale ethanol blending. So that will be a bit margin dilutive for the distillery business.
Understood that. Now let's talk about the current state of operations. Are operations viable in the current set of prices? What is it that sugar companies would be hoping for?
So operations are very much viable. Only in case of grain ethanol, I think the industry would be expecting some price increase, both in your FCI rice as well as ethanol based out of maize. But otherwise, for any kind of feedstock relating to sugar, which is your B heavy, C heavy, or cane juice, operations are viable, but the return on capital employed is less. So no one is making losses in sugar-based ethanol, but returns would not be adequate for juice ethanol.
Now, Prashant, there are also talks of allowing exports of up to 10 lakh tons. Now, ISMA wants 20. If this move does go through, what is the kind of impact that you foresee?
So if exports are allowed to the extent of 1 million ton, I think there will be some relief on the balance sheet side, while it would be lower than expectation because we can export around 2 million tons. But I am expecting relief on working capital requirements, nothing much on the EBITDA front, because internationally prices have come down vis-a-vis what they were earlier. A year back around 26 to 28 cents. Now they are hovering between 18 to 19 cents. So no, not a major impact on EBITDA, but certainly on the interest component part, which companies incur on working capital, there some relief is expected.
Thank you so much, Prashant, for joining us and giving us your take on what is still a developing story. Well, a couple of stocks on the radar. Remember, quite a few important results today, so it'll be interesting to see how the stocks are moving just ahead of the results. We had the numbers of Sterling and Wilson Solar that just came about, and the stock is reacting quite positively to that. It's a back-to-black quarter as far as Sterling and Wilson is concerned, up 6.5%. The other stock on the radar is Reliance Industries. The stock is now near the day's highest point. Also have a look at Infosys today. Infosys is another stock that will be coming out of its results. And Axis Bank, that is the other stock on the radar. Axis Bank too will be in focus, and they'll be declaring the results today, Harman.
Important to keep an eye out on all of these names, but the one stock that continues to move higher regardless of where the market is BSE, and that is now 3.5% higher today, heading towards the mark of 6,000. It's slightly off the highs. It already made a high in excess of 6,000. So now trading near that mark. So 3.5% higher there on BSE. And the other one that's seeing some bit of selling pressure today though is Motilal Oswal, and that stock is now slumped to the lowest point of the day, 5.6% lower on Motilal Oswal Financial Services. And there you can see it's been a one-way drop since the morning. It opened higher, but since then it has continued to decline, and now down to the lowest point of the day, 18% down in a month is Motilal Oswal. Kalyan Jewellers has seen a bit of a recovery from the lows of the day. At one point was down 4.5%, now trading with losses of anywhere close to 3%. Kalyan Jewellers, mind you, the stock is in the FNO band today, so no new positions on that as well. And one more before we call time on the show is Trent, and that is trading 3% lower in today's trading session, among the top losers on the index. It just made an announcement today. They'll be declaring results on the 6th of February. But with that, it's a wrap on this edition of Midcap Radar. The Nifty continues to remain above 23,300. From Vivek, me and the team that put this show together, thank you so much for watching. MF Corner up next.